Let me give you a few tax tips when sending kids to private school or public schools, okay? And here's a presentation I want you to really pay attention to. So the thing is that basically when you send kids to private or public schools, there are a few things you need to really understand. There are a few questions also that we have gotten from our viewers and from a lot of folks that we've been talking to. So can you get a tax break for sending your kids to school? What tax breaks are available to pay for education costs, and tax-friendly accounts actually are there to pay qualified education expenses. Is it true? So in today's conversation, we'll answer all those questions and more, so to sort of bring more clarity into this debate. So the thing here is that basically the bottom line here is that under federal tax law, private school tuition is not tax deductible unless your child is attending a private school for special needs. Let me repeat that. This is kind of important because a lot of parents get it wrong. So under federal tax law, private school tuition is not tax deductible unless your child is attending a private school for special needs. And another thing is, if a physician's referral process actually is there to prove that your child requires access to special needs private education, the expenses could qualify as deductible medical expenses. Okay, deductible medical expenses subject to the percentage, the threshold that you know when it comes to the medical expenses. So while you can't deduct private school tuition directly, you can avoid paying taxes on the earnings from a Coverdell education savings account and an ESA if the funds are used to cover qualified K through a 12th grade education expenses. You can also make tax-free withdrawals from a qualified tuition plan, also known as a 529 plan, if those funds are used to pay for tuition, not for books or other educational expenses. So basically, let's really go back to the question that I asked earlier. Can you get a tax break for sending your kids to school? Like now, I want to go granular. I want to go really, really deep here. So the thing is that sending your kids to public school from kindergarten to 12th grade generally will not result in any tax breaks for you. Regardless of how many kids you have, you can have one child or 12 children or 20 children or whatever. It doesn't matter. Likewise, in most circumstances, you will not get a significant break on your taxes by actually sending your kids to private schools either. So federal tax law does not allow you to deduct private school tuition to lower your federal tax liability. So if your child is attending a private school for special needs, yes. Okay, it's really possible. And what tax breaks are available to pay for education costs? Well, unfortunately, paying for private school tuition is generally not tax deductible on your federal tax income, on your income tax return. On the other hand, you do have access to two types of accounts that can lower the cost of paying for a qualified education expense. Okay. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. So the two accounts that really can help you here in terms of lowering your tax liabilities, let's first talk about them. So tax-friendly accounts to pay qualified education expenses. So you can use two tax-friendly accounts, only two, to assist in paying for qualified education expenses. So you have the Coverdell Education Savings Account, so the ESA, and the Qualified Tuition Plan, also known as a 529 plan. So these accounts allow you to invest money to pay for certain education expenses for both K through 12th grade and for college or other qualifying education expenses. So let's first talk about the first one. Let's talk about the Coverdell Education Savings Account. So while you can't generally use private school tuition to directly reduce your tax liability, the government may actually offer some tax relief from tax relief in the form of Coverdell Education Savings Accounts or ESAs. And these accounts actually allow you, when you really think about it, to invest your education savings without paying taxes on the earnings. Okay, so this is really good in terms of giving you flexibility here. So ESA funds can be used to cover qualified K through 12th grade education expenses like tuition, textbooks, or other supplies required by your child's program. Okay, and so each year up to $10,000 per student can be withdrawn tax-free from these accounts to pay for these expenses. The tax benefits of contributing to a Coverdell ESA are capped, so contributions for each beneficiary are limited to $2,000 a year. So let me give you an example. If your child, let's say your child's grandparents contribute $1,000 to your child's Coverdell account, you'd only be able to contribute an additional $1,000 yourself for the year. And your income might also reduce your contributions limits. So if your modified adjusted gross income this year is above $95,000 to $96,000 or $190,000 if you're filing jointly, you will notice a gradual reduction in your contribution limits until you reach $190,000 to $195,000 and $210,000 filing jointly, where you are no longer able to make a contribution. And if you are eligible, you can contribute to the account until your child turns 18 or beyond age 18 if your child has special needs. And so that's for the Coverdale. What about the 529 education savings plan? So like the Coverdale accounts that I just explained to you a few minutes ago, basically each year up to $10,000 per student can be withdrawn tax-free from the 529 accounts. However, unlike Coverdale accounts, to retain the tax-free benefits, the 529 money can only be used for tuition and not for textbooks, computers, or other fees or activities. So these two valuable educational savings accounts can provide tax benefits for after-tax money you invest. But unlike using the account to save for college, you won't have as much time for the investments to grow in value. So as a result, your benefits will not likely be as great for the money you need sooner. So still, taking advantage of any tax savings you can find can be really useful. Boss, I want to quickly remind you of today's topic. We are having a conversation about tax tips when sending kids to private or public schools. Let's talk about the tax credits that are available for attending school. Are there any tax credits at all? Yes, there are tax credits, so this is really fantastic. First of all, basically, you have the dependent care credit for attending homeschool and after-school care. So the child and the dependent care credit provides a tax break for parents who pay for the cost of child care. So while the credit targets working parents or guardians, if you were a full-time student or unemployed for part of the year, you may also qualify to claim the child and dependent care credit. So if you paid an after-school program, daycare center, babysitter, summer camp, or other care provider to care for a qualifying child under age 13 or a disabled dependent of any age, you may qualify for a tax credit on this year's taxes up to as much as 35% off, up to $3,000 of qualified expenses for a maximum credit of $1,050 for one child or dependent, or up to $6,000 of qualifying for a maximum credit of $2,100 for two or more children or dependents. Okay, let me give you an example. For this tax year, a taxpayer with one qualifying person, $3,000 in qualifying expenses, and an AGI of $60,000 will qualify for a non-refundable credit of approximately $600. So that's 20% of $3,000. So that's for the dependent care credit for attending before school and after school care. What about the American Opportunity Tax Credit? Now, this is actually a tax credit available to pay for the cost of attending college for students. So the credit generally offers greater tax savings than other education-related tax benefits because it really reduces the tax you owe on a dollar-for-dollar basis, and a portion of it can be refundable. However, you can't use this credit to offset costs related to K-12 education. Let's talk also about lifetime learning credit. So this credit reduces your tax bill on a dollar-for-dollar basis for a portion of the tuition, fees, and other qualifying expenses you pay for yourself, a spouse, or a dependent to enroll in a post-secondary school. However, none of the lifetime learning credit is refundable. So that's one of those things where you have to be really aware of how it affects your situation. Like the American Opportunity Credit, you can't use this credit to lower the cost of private school K-12 education. You also have a dependent care flexible spending account, so a DCFSA. So basically, this is a pre-tax account that can be used to pay for eligible dependent care expenses. So qualifying dependents include children under the age of 13, a disabled spouse, or an older parent in elder care. And generally, you will need to access this account through an employer that offers this as a benefit to employees. So while parents can use these funds to pay for K-12 public or private school tuition, they can use this pre-tax money to help pay for before school or after school care. So this is one of those things where you have to really see your situation. If you have any questions, let us know in the comment section and we'll get back to you. Not a problem. Let me give you a bonus here. We want to really dig a little deeper here in terms of, is private school tuition tax deductible at all? Because a lot of parents are really thinking about that. Well, it really depends. As I said earlier, when I started this conversation, I said that tuition is not deductible on federal income taxes. The parents have other options to reduce costs, right? So you're talking about Coverdale. You're talking about also the 529. Well, one thing you need to really understand here is that it's really about your situation. It's really about your situation because you have two ways to save. I think I've already established that you have two ways to save. The 529 and the Coverdale ESAs. Okay. Now, so basically, when you think about Coverdale, this is just a tax-deferred trust account created by the U.S. government to help families pay for education expenses. That's all, education expenses. And the 529 Education Savings Plan is really a tax-advantaged savings plan designed to help pay for education. And this is one of those things where the 529 Education Savings Plan was originally limited to post-high school education cost, but they were expanded to include also K-12 education in 2017. So this is really cool. And although they take their name from Section 529 of the Federal Tax Code, the plans are administered by the 50 states and the District of Columbia. So this is kind of cool. And what I want to say here is that a family can have both a Coverdale ESA and a 529 plan for the same beneficiary's education expenses. Of course, subject to the limits that I just alluded to earlier. Okay. And one thing I want to say here is that when we talk about Coverdale and 529, you have to actually everything depends upon your special family situation. But when you actually want to think about, if you have to consider Coverdale or ESA, or ESA or 529 rather, please make sure that you pay attention to the age requirements, the contribution amounts, the income limits, the distributions, and the tax advantages. Okay, so for instance, for Coverdale ESAs, contributions are not deductible. Earnings, that is interest, are not taxed if distributions are used for qualified education expenses. For 529 plans, contributions are really not tax deductible for federal income tax purposes, but more than 30 states provide tax deductions or credit of varying amounts for contributions. So rules vary here, state by state. It's one of those things where you have to really, be aware of how this affects you. By the way, boss, I want to quickly remind you of today's topic. We're having a conversation about tax tips when sending kids to private or public schools. I want to go a little granular here in terms of giving you the approach you need to really think about when it comes to if you are sending children to private school, not public school, but private school, you basically have to think about a few other things. So I've already established the Coverdale Education Savings Account, so that's one. But also think about the state tax benefits. If you're sending kids to private school, the thing is that many state governments offer various tax benefits for educational expenses. So Minnesota, for example, offers a state tax breaks for textbook expenses, driver education instructor fees, all-day kindergarten fees, and college tuition. So you have that possibility there. And limitations apply to some of these deductions, though. So you have religious textbooks, for example, are not eligible for tax breaks. And Illinois actually offers an education expense credit that applies to kindergarten, primary school, middle school, and high school student expenses. So again, you want to call the tax authorities in your state to actually have a clear idea what they're actually talking about. So if you're sending your kids to private school, you really want to. There are some tax considerations that can actually alleviate your tax burden. So what about child care expenses? So if your child is under 13 and the private school offers before and after school care, you may claim the child care credit, the child care tax credit for your expenses limited to a maximum of $3,000 per child. And you can even deduct some of the cost of a private kindergarten if you pay separate fees for an educational component and a child care component. So you have, if you have that, not a problem. Now, remember though, this is a credit. It is not a deduction. So you actually deduct it directly from your tax bill, not your taxable income. So you have state tax benefits. You have a child care expenses. You have the Coverdale ESA. You also have higher education tax credit. So you have, for instance, the American Opportunity Tax Credit, which actually replaced the Hope tax credit, actually offers a credit of up to $2,500 in tuition, books, and certain other expenses if your child is enrolled at least half-time in college. Okay, he or she has to be at least half-time in college. You also have the lifetime learning credit, which offers a credit of 20% of the same expenses for a maximum credit of $2,000 per year. You also have the lifetime learning credit. This cannot be used by taxpayers whose modified adjusted gross income exceeds $61,000 to $65,000 per year, or $120,000 to $130,000 if you are married and filing jointly. Okay, but those amounts change all the time. Every single year you have new amounts. Let me actually continue the conversation by saying that, when we talk about tax deductions and tax breaks for private schools, it's really important to understand that it's not just about the tuition you're paying. Okay, it's also about like other costs. For instance, if you have a child with special needs, you have costs they're just I would say extra to the tuition, right? And it's really important to understand that if you are a parent in that situation, you can claim an itemized deduction for a tuition cost, of course, but also for ancillary expenses that are really related to your special needs children for grade kindergarten through 12. If it's really established that the school is medically or therapeutically requiring to do so. What I'm trying to say here is that those expenses become deductible expenses if it is therapeutically actually required. Okay, and it's one of those things where you have to actually approach the schools authorities. You have to actually you have to contact your tax authorities in your state to have a better idea. But generally, whether you have a child with special needs or let's just say whether you have what I want to say is that no matter the situation, your family situation, no matter the children you have, no matter their health status, you basically can also benefit from tax breaks. Not a problem. Okay, but of course, if you have special needs, then if you have a child with special needs, then the age requirement doesn't apply anymore, because if your child is 25 or your child is 30 and is a special needs child, the expenses are still there for you, and the federal government and your state government, for that matter, allow you to actually to deduct those expenses. Okay, so you want to sit down and really have a clear idea about your family's situation and see what you can qualify for. And but the thing here is that just remember that you are able to actually claim a constellation of expenses. You have basically K-12 or your tuition. You have basically private school costs for children with special needs. You have before school and after school care costs. That's totally deductible. For the 529 that I just spoke about, K-12 education, not a problem. You have the Coverdell ESA, not a problem. Okay, but the bottom line here is that you basically want to track those expenses all year long. What I'm trying to say is, if your goal is to actually claim them at the end of the year, you need to actually track those expenses. Maybe you can have an app, or you can have, if you have a personal finance app, you can actually track those expenses, or you can just use the good old Excel spreadsheets to actually know exactly how much you're paying for each account category, so that at the end of the year you can write them off really, really easily. So these were tax tips for when sending kids to private schools or public schools. And let me do a quick recap here. So I spoke to you, I gave you the presentation, I gave you a bonus, I gave you the opportunity to follow. And so thank you so much for your attention. God bless you. I'll speak to you another time. Until then, remember, stay marvelous.